The stock market, economy, and the world all seem to be in chaos today. As of yesterday, February 22nd, the S&P 500 entered official correction territory and is down over 10% for the year. Many investors and retirees are very anxious about this, and they're really nervous about watching their portfolio and investments fall from all-time record highs, and rightfully so. Inflation is still high. There's a fear of a slowdown of the economy, and the threat of a war between Ukraine and Russia grows by the hour. And all this fear, uncertainty, and doubt cause the markets to sell off. But before you make any emotional decisions, like selling and waiting for the markets to calm down, I want to show you a bigger picture outlook to consider and reflect upon, especially when thinking about your long-term investments and your financial goals. So here's what I want you to take away from today's video. Stocks tend to do well after corrections occur. This is a data going all the way back to 1980, reflecting the returns of the S&P 500 over the last 40 years or so. And you can see that during any year in which we've experienced a negative correction of 10% or more, the S&P 500 has tended to return positive returns after the 1 and 2 year lows. There's only been a handful of times, if we look back at the tech bubble of 1999 and 2000, or looking back at the financial crisis of 2008, where subsequent returns over the following 2 years still yielded negative returns over that period of time. But what you can see here from the results is, even during that period, the market over time returned positive results. And we can see going back all the way to 2008 to present. Look at all the green that we've seen in the markets after we've experienced some scary times. It's not easy to go through the volatility and the uncertainty, but by keeping a level head and knowing exactly what you own and what your goals are, it can keep you on the right track to success for yourself and your own retirement and investment planning. So what should you do now? Well, number one, take a deep breath, because it's always going to be all right. Understand the markets go through these periods of volatility, and it's a normal part of the market process. Nothing can go up forever. If we think back to 2020, when the pandemic began, to now, the market overall has experienced tremendous returns over that period of time, and 10%, albeit scary and a little bit anxiety driven, isn't the end of the world. Nothing can go up forever. Next, look at today's markets as an opportunity. Good funds and companies are literally on sale, and they may not be forever. Next, stick to your game plan. Ask yourself, do you need the money now? Or do you need the money 10 years from now, or 20 years from now, or maybe even longer? If it's the latter, don't worry about all the market noise today. And lastly, if all else fails, seek advice and get a second opinion from a qualified financial professional that can help you understand your investments, your portfolio risk, and your goals, and help you put together a plan of how it's going to work in your favor for the long run. If you have any questions and you want to discuss your personal situation, let's talk. My name is Alex Corey. I'm a certified financial planner and a certified exit planning advisor here in Scottsdale, Arizona. I look forward to meeting you, and we'll talk soon.